So today we're going to review KLIP, KraneShares China Internet and Cover Call ETF, and see if this fund is fund for you as a passive income investor to invest your money. Because the whole thing is to see not only the highest yield, but we want to look at the fundamental of the fund that we invest our money. Right? That's the main key. We're going to take a look at the overview. We're going to review performance and growth of $10,000 holdings, and we're going to see if this fund is suitable for you to invest your money as a passive income investor. So, overview of this fund: investment strategy that follows, right? KraneShares China Internet and Cover Call Strategy ETF, or ticker symbol is KLIP, seek to provide current income by following a covered call or buy right strategy. KLIP buys share of the KraneShares CSI China Internet ETF or KWEB and write or sells corresponding call on KWEB. Both KWEB and KLIP are benchmarked to the CSI of overseas China Internet Index, which track the performance of the investable universe of public traded China-based companies in the internet sector. We're going to view those companies, by the way. KLIP can provide investor with attractive current yield while retaining capped participation in the potential price gain of KWEB. Cover call ETF features. Cover call ETF is an exchange traded fund that provides investors with a premium income by writing option on stocks or ETF. So you can use the stocks, like we have the Tesla stock ETF, which only follow Tesla and write a call on that, or you can follow an ETF and write a call on that. Like this example here, KLIP does write call on an ETF rather than a stock. Cover call ETF manages the option exposure for investor, which can be more economical and time efficient than buying individual stock option, because you can buy your individual stock and write a call on them, but that way it's more expensive because you have to pay those premium, and also takes knowledge and takes time. So instead of doing that, you can just buy an ETF like this one that does that for you, and you just pay the MER, but at the same time you get the monthly dividends, and you don't have to worry about buying and selling yourself or for yourself. Writing cover call may provide a high yield during period of market volatility, as we've talked so many times that the more volatile the market it is, the better the premium, because there's more selling and buying, and a higher premium at that time, and that way generate more income. We look at the ETF itself, which is a KLIP features, right? KLIP sell cover call option on KWEB, which is the index or ETF that we will look into. It's an established ETF with a deep option market. KWEB provide exposure to China internet sector, which has historically been more volatile than the US internet and technology sector. KLIP has potential to provide a high yield than a cover call strategy based on the US and other markets. Combined allocation to both KWEB and KLIP can help produce a targeted growth and income strategy by maintaining upside while trading performance uncertain for more stable income. And KLIP provide monthly distribution, which is beautiful because we love monthly distribution. We look at the way the KLIP is traded. It's a New York Stock Exchange, and you want to buy that, you're going to go to your brokerage, you're going to put KLIP, and the ticker symbol. You just have to make sure it's traded on New York Stock Exchange if you want to buy. Net asset value at this moment is about 10 over close to 11 million. We look at the inception date, it was January 1st, January 12th, 2023, so it's brand new. We look at the current yield right now is about 60.92, so about 61%. You have to be careful about the yield though. Here they put this as current yield. So the current the annual yields an investor would receive, assuming that the last declared distribution include option income remaining the same in the future. So if you're getting the yield today, divide the yield by the price, you get the yield today. But let's say, for example, they change and next month or something like that, you don't get the same amount of let's say it was $2 and next month you're getting $1.50, then they take $1.50 divided by the price at that moment and that's you get the yield. So the yield might change frequently, so it's not going to remain the same. It can be high, it can be lower based on what they pay at that time. We look at the NAV right now is 1997. We look at the price that you're going to pay as of market close on Friday was 2008. A little bit more, about 10 cents more than the NAV itself. We look at the performance, cumulative performance since inception, fund NAV index. So fund NAV 459, index 1956. So it's a pretty good 459, and that's a fund NAV, right? Which is a fund itself or before, but the index has returned about 19%. So you get more money by investing in this than the index itself. Which is a pretty much KWEB. If you invest in KWEB, you'd be lower. You'd be 19% down. We look at the since inception, cumulative data is of quarter. That was March. This is April. We look at the March, it was 3% and index was 9%. So in general, because of those dividends, you'd be your performance will be better than the index itself. We look at the $10,000 invested at that since inception on January, you would be at 9,541. So you would have lost about 460. But in the meantime, how do you invest those? How do you put more money in the fund because you buy lower and higher? So you'd have accumulated more shares, therefore more income you'd be receiving at this time. We look at the top holding. 90% of this, 98% of this is KWEB, because this thing is just invested almost 100% on KWEB itself. So that brings us to a question: what's KWEB? We can look here at KWEB and what KWEB invests in. We look at the KWEB. KWEB is KraneShares CSI China Internet ETF. So this is an ETF. It's not a cover call ETF. It's just a purely ETF that follows the index, right? Because KWEB tracks the CSI China Internet index, which consists of China-based companies whose primary businesses are focused on internet and internet-related technology. The index is a free float market capitalization weighted and include public traded security on either a Hong Kong Stock Exchange, NASDAQ Stock Exchange, or the New York Stock Exchange. So that's a KWEB for you. What does KWEB invest in? We can look. This is just a brief of KWEB itself. The top holding of KWEB, that's an index that KLIP is following or writes call on it. It does invest. These are the top holding of KWEB, which is Tencent's holding, Alibaba Group, JD.com. These are most popular ETFs or stocks for Americans and Canadians. Tencent and Alibaba, which actually is the most popular one. JD.com, Baidu Inc. So yeah, there you have it. So if you want to generate the 69% of monthly yield dividend, then KLIP is a fund for you. And if it's your first time, just make sure you subscribe, because on this channel I talk about cover call income generating ETFs. And whenever there are changes in news, anything that would impact your portfolio, I make sure that I let you know, so that way you stay on top of your portfolio. Thank you for watching again. If you like the content, make sure you like. Till we meet again. Bye bye.